Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a beautiful and sunny Denver, Colorado today. On this fine Wednesday, pleased to be joined by my friend and fellow Schwab coach, Brent Morris. Good morning, Brent. Good to see you again. How are things today?
Things are good. I'm glad to be here with you, Kevin. It's been had a nice long weekend, and then I guess we had yesterday, and good. Glad to look at the markets with you today.
Yeah, we're going to get into it, obviously hitting up the major indices, stocks in the news. We did hear from the courts late yesterday on some antitrust stuff associated with Alphabet and Apple, as it turns out. So both of them are on the move today. They will be in our stocks in the news portion of the segment. So also take a moment and say hey to Barb Armstrong in the chat. She'll keep an eye on all of you, answer questions that Brent and I are unable to get to, but we want to hear from you nonetheless. Please feel free to post in there for the duration of the show, everyone. Of course, if you're not already doing so, we would love to have your follow on X. You can do that for us individually. It's absolutely the best way to meet up with your coaches outside of the classes that we host for you here. So follow Barb Armstrong CS. Brent is Brent Moores CS, and I, of course, am Kevin Horner CS there. Try to post for you there numerous times throughout the week. Interesting charts, data points, etc., things that you might want to be aware of. So great reason to follow us there. Let's get to our disclosures, and then we'll jump right on into the conversation, everyone. So please remember that our discussion here is exclusively informational and educational. Remember, we do not make recommendations. We do not make endorsements for a specific approach to trading the market. We will discuss technical analysis, however, discussing and reviewing concepts and strategies traders might choose to employ when they're trading the markets. But it's important to remember that technical analysis should be considered merely a piece of the puzzle. We discourage you from basing decisions exclusively off technical analysis. Let's look briefly at the agenda, which will be pretty consistent for those of you who are frequent flyers with us. We will do the top-down methodology. We'll hit our major indices, look at some sectors that are on the move, and as I noted, some stocks in the news. We've got a number of key positions that you all are probably familiar with. We'll make sure to hit up a bunch of those for you today. And with that, let's take a look at that S&P 500. We had a bit of a weak open yesterday, Brent, and yet once more, the takeaway that I can't get away from is that the market finished better than we opened, and that's still bullish behavior by and large. What else are you taking away from what we're seeing in the S&P 500?
Well, I was kind of curious because we lost the 20-day yesterday. That's the orangish line there.
Yeah.
And we've done that periodically. And so I don't think it was necessarily a particular concern, but yeah, we had a kind of a strong rally in, latter part of the day yesterday. And you can see we finished right at the high. And by the way, that's always, a bullish sign when you finish at the high of the day, even if you've had a down day. And yesterday was a down day by any means. And vice versa, if you have an up day, but we finish right at the low of the day, that's usually kind of not a good omen for the next day. Well, we've opened up, and right now, we're just market's barely started, but we bounced back up above that 20-day. So in terms of trend break, I don't think yesterday is particularly a bad sign at this point either. You can see some weakness, maybe some lessening of the trend. I think we can see that in some different ways. One way is look at that RSI. You can see we've gotten some lower highs on that.
Yep.
And no, the trend hasn't broken, but it just seems like it's not as quite as robust as it was a month ago.
Yeah, I think we could say that without getting too far ahead of ourselves. I mean, we've kind of our moves to the upside. When we make new highs, they're becoming smaller new highs than they had been, right? Yes. We've seen big breakouts, right, through major areas of resistance. And now those breaks are becoming limited in scope as we are trading at this upper level for longer maybe than some traders would have expected. But you're absolutely right. we've not violated the 50-day yet. And I think a lot of traders are waiting for something like that to offer even greater opportunity. They're still buying up, though, these limited pullbacks. I mean, the low yesterday is a very nice candle from a bullish standpoint, right? I mean, that's a not a bull engulfing, but a hammer candle at an area that some traders would have called support. So, we'll see, Brent, if today's action holds, but back above the 20-day is not a negative off the open here.
No, and what's happening is we're seeing kind of a shift in the market, and we'll see this a little bit when we look at the Nasdaq. The Nasdaq is showing a little bit more weakness than the S&P 500. What's happening is certain parts of the market are kind of maybe picking up the slack a little bit. It's a tough go because some of the sectors that are maybe starting to underperform a little bit are the bigger ones that have more impact on market weight. But if you look at like over the last month, in fact, I don't know if we could do this, Kevin. Let's take a look at the S&P 500 pure growth. I'll give you so the ticker symbol on this is $ SP 500 PG. And if we can just do a month chart of the returns on this, percentage returns. Let's do a percentage chart. So the way to do a percentage chart, everybody, well, there's different ways to do it. You can go up where Kevin's going up to that gear there and just change that price axis to a percentage. And there you go. The other way is you can go to that little squiggly line in the upper right portion of the page and just click on, there's a show prices percentage setting on there. But what we can see is, let's go to 1 month chart there. Here,
okay.
We got a 10-year.
1 month for the
1 month
duration?
Yeah, 1 month. Yeah, sorry, 1 month total duration. Okay, got it.
Okay.
So here's the last month grow. What this is it's taking the S&P 500 and it's taking the most growth companies, those categorized in the growth category over the last month. We've actually it's gone down a little bit here over the last month on the growth. Now, if you just change that ticker symbol and instead of a G on the end, make it a V on the end, this is the value. That's up about 6%. Now, if you were to do the same thing over the last 3 months, the percentages are about the same. In other words, over the last 3 months, they're the same, but all the growth in the value index has occurred over the last month, and all the growth in the growth index has been over the 2 months prior to that. So we're seeing a shift into more growth over the past month versus more value shift into more value over the last month versus more growth in the last month. It's just kind of showing, the trend has been hanging in there in the S&P 500, but we're getting a little bit of different representation in the types of companies.
That's another great way to monitor that info beyond, say, utilizing, the Market Watch tab, for example, right? And just tracking relative strength or outperformance. The visual on this really stands out to me as a trader. I mean, you're noting here a breakout through an area of former resistance and essentially, flagging after the fact. So consolidation mode over the last week and a half here after having broken out. So I think what you're stating, Brian, if I could put a little bow on this, is to suggest that we've seen a rotation of money out of the higher risk on assets like technology, like communications, like discretionary. And instead of pulling that money from the market, rather redeploying it to those lagger groups, the value groups that have been not leading the pace along the last 6 to 9 months, for example.
Yes, absolutely, Kevin. It's a little bit more of a shift to more risk off type. And we'll see that as we go on in this session into some other asset classes where a little bit more risk off type mentality.
Interesting. Okay. And it's not that we haven't seen that. It's always good to get another visual way to reflect that, right? I always appreciate that. So that's a wonderful way to look at that. Again, be aware that you can, sometimes there's a way to look at things that makes sense to our brains, and then there's a way to look at things that doesn't. And not all of us can look at just the standard table view, for example, in the Market Watch tab, and look at quotes and say, all right, well, here's the 11 sectors that are moving. This can tell you plenty as well, but sometimes you need a different view of things. So that's a great look at what we saw there from growth versus value as it relates to the S&P 500. Good stuff, Brent. Let's move to that NDX, which is up about 0.5% here today. I'm going to pull back on my chart. Let's go to a bit more standard window. That's why I'm all messed up here, everybody. I'm on my weekly chart, so let's go back to my daily. Now, the NASDAQ did the NASDAQ 100, pretty much the same thing here, Brent, except that we found the 50-day for the first time with the NDX. So, Brent, is it a negative to find the 50-day for what now looks like a successful test of support?
No, I mean, I guess this is a little bit of hindsight in that we got the bounce, but going down to the 50-day is not necessarily a terrible thing, because look at the reaction when we hit the 50-day. Look at that candle. We dipped below it, but it's going back to what we were saying before. By the end of the day, we closed right at the end of the high of the day. And so kind of a similar situation. It's inevitable we're going to have pullbacks. If you're a trend trader, what you want to see is the bounce. Now, we do have a lower high on the kind of a little bit of a head and shoulders almost-ish pattern there, Kevin, if you look over the past, few weeks there. There's a shoulder right there. There's a shoulder right there. There's the head there. And then the bigger white line is kind of the neckline there, if you will. Well, we successfully bounced off it at this point. The challenge using that pattern is the real bearish thing is if you break that neckline where that long white line is, which we didn't. We bounced right off that. So we'll see if that holds. If that does break, that would be more of a bearish signal.
Yeah, it would. And if we were looking to validate a break like that, I mean, this is just an easy way that some traders will look at it. They might just measure the height of the head to the neckline, take that and add it. If it were to break, what becomes a potential target? Well, in this case, it happens to line up with prior highs. So that all makes sense. And again, all we're trying to do is get an estimation for where things can go. Reminder, one of my favorite idioms as it relates to the market, Brent, is that we don't expect the technical analysis to tell us what will happen next, but it allows us to set our risk parameters properly. And the risk of the NASDAQ retreating down to this 22,000 level is exaggerated if we trade below 22,960, essentially. That's the reminder, right? It becomes more likely that we could get down to that 22,000 level if we trade under that first white level here, 22,960, then our odds increase for a deeper pullback. Is there another way to say that for you, Brent?
I think that's clear enough there. And just remember, when you do these patterns, whether they're head and shoulders or triangles or whatever, really it comes down to support and resistance levels. That's a support level, and we held on that. So so far so good on that.
Yeah, so far so good. Reminder that one day is not necessarily a sufficient view or test of support, everyone. So please be aware. Some of you might view that the one-day pullback has been, completely taken out now that we've traded back through the high of yesterday. Some of you want a couple of days above the 50-day, more than one day, maybe a second day two of closing above the 50-day. Remember, set your confirmatory details, know what you want for confirmation, and then take your actions based on those steps that you build for yourselves. Let's see how the small caps are reacting here this morning. We're basically flat. They got that pullback as well, but not nearly as deep a pullback here, Brent. This looks like a possibility for what some would call a successful test of our breakout ledge at around that 2315 level.
Yeah, it seems weird to be saying this, but small caps have been the strongest part of the market, which is very different than what we've said for 90% of the last few years here on this. But that's what we've seen. We had the pullback. No, not a biggie though. I mean, we're kind of about break even, and the trend is holding fast, kind of flag pattern, if you will. But you can see the relationship here on this. When I say it's a little stronger, look at where the 20-day moving average is on this, where the stock is or the index is in relationship to that 20-day moving average. So that's a kind of a quick way to show the shorter term strength of that.
Yeah, it is. And the fact that we've taken out this ledge and held it. I mean, again, yesterday's action kind of looks like a test of that breakout. We'll reserve judgment for a day or two. Let's see if we can trade through the high of yesterday. We haven't done it just yet, but this does look have the makings of a vastly improving trend. Obviously, looking at the lows we made in April to where we are today. Let's pull this into the weekly chart. You can see that those highs that represent up above us, those are all-time highs on the Russell 2000. So, this is now finally giving a bit of a different view once more, Brent. And the reason I like to look at this one is I just want to be constantly reminded to trade what we see and not necessarily what we think. Because you'd be forgiven for, not necessarily believing in what you're getting out of small caps. But if you just traded the trend with the small caps, basically since we recaptured the 50-day, Brent, we've only tested the 50-day once way back here at the end of July. And that was an excellent opportunity for joining the short-term trend. And it's certainly been working since. And I imagine, Brent, some of this is, of course, looking at the rate environment. So let's piece into the rate real quick. Let's see how we look in the 10-year, which is down a little bit today. But ultimately, the fact is, Brent, we have held our level, but the optimism around rate cuts and the likelihood for cuts between now and the end of the year remains very elevated. I guess the question becomes, how are yields going to act when this decision actually hits? We really have no idea.
Yeah, we don't know. I mean, this ties into Pavo's question in the chat as to what's going on with the rut. I would say there's kind of maybe two things. And this, I'm no expert in exactly what's happening with the rut necessarily, but what I would say is, as you mentioned, I think there's a general view that we're looking at lower rates, and at the same time, I think a general view that the likelihood of recession has gone down. And I think both of those things have boosted the small caps. But to your point, if the Fed cuts the Fed funds rate, it doesn't necessarily mean longer term rates are going down, although generally a lowering rate environment tends to affect longer term, but not always. And we saw that last year where we had a significant rate cut. The last time we had a significant rate cut in the Fed funds rate, the 10-year shot up. And so we don't know what's going to happen. We don't know what's going to happen there. But part of it's, this is not just for this. It's not just for interest rates. The market tries to anticipate. It bakes stuff in that it anticipates. And you can see the lowering in the TNX now almost in anticipation. Whereas if, let's say, we go ahead and we get a rate cut in September, which most people are expecting, that's not like going to shock the market or anything, I think, at this point. So it's unlikely you'd see a bigger move in the market based on something that people are expecting already.
Yeah, I think the reminder here, Brent, is really, let's see if there's a shift in the trend, right? And if there's a shift in the trend, then things would be impacting the movement in maybe the Russell or some of those other rate-sensitive groups. Meaning, if we traded below 4.2 on the 10-year, for example, a yield under what has been the low for the last year, outside of our big spike to the downside, our big drop there in April on the tariff tantrum, as I like to call it. If we broke support at 4.2, I think that would be a boon to those sensitive interest rate groupings. So that bears watching. But obviously, like I said, we don't know how the market's going to react. 91% chance of a cut, and the September meeting. The September meeting is 2 weeks from today. There you go. To answer your question there, Carol, at least as it relates to the Fed announcement.
Let me just tackle, Carol also asked, are we getting jobs? There's a JOLTS report coming out in, I think, in about 10 minutes here, Carol. So yes, that JOLTS is a jobs report. It's not, probably the most significant one in the world, but it certainly could affect the market there.
Yes, and it basically a bit of a heads up as it relates to Friday's jobs, right? I mean, it certainly could be the case. So it could be a market volatility moment, not necessarily a market mover. We'll see. I guess, the JOLTS number tend to be a little more, if they are surprises, they tend to move the market. If it's in line or expectations are adequate, then generally you don't get a huge necessarily move. So we'll see how that goes. We got about 10 minutes to that. Okay, let's look in on our semis. Our semis have pulled back into basically, I say pull back from the highs, but we've just been rangy in here. I've got way too many lines. So let's just start from fresh. We basically have gone nowhere now, Brent, for the better part of all of July and all of August. So you're looking at 2 months of what some traders would call consolidation. Now, Brent, when I look at this, the one thing that really clearly stands out are the prior highs acting as new short-term support. That is a wonderful development if that level that I've drawn in can be held.
Yeah, that's a significant support level. I think a lot of times people go, well, how strong is a particular support level or resistance level? Well, one of the key things is how many times you've bounced off that, and if you've done it over different time periods. And we've bounced off it multiple times over different time periods. And so far, yesterday, we were getting a little bit close, bounce off that again. So that doesn't mean that can't break, but I think you're right. That's a significant support level. And so we'll see. And this is kind of a key thing. I mean, that's why we look at the SOX pretty much every time we do this session here, Kevin, is the SOX has been a key part of the market. This SOX is the semiconductor index. And it's been a key driver in the market. Think NVIDIA, AMD, companies like that. They certainly are an important thing to look at here.
Yeah, and you can see, Brent, that while we haven't made new highs here, we've tested maybe the range of prior highs. This is the weekly look at things, everyone. So this still, if you're looking for reasons to stay optimistic, this chart's giving them to you, everybody. I mean, this is still looking like a bit of a bull flag as we've flattened out the action of the last 2 months in here. So you've got about 8 bars on the weekly going sideways, holding horizontal support. A lot of traders would say that elevated level holding at least gives them the confidence to stay with the existing trend. Now, under the level here that we've got, under the white line, that changes, of course. So you definitely want to be aware of that. But I'm going to go back to my price axis and remove the price as percentage so we can see the level. So basically, it's about 54.60 or so, the 54.5 to 54.60, the level on the SOX index that's been monitored here. Go ahead, Brent.
One thing I would say is this, when you've had a stronger run as you had, and we had about a 74% run from low to high there, from early April to mid-August. Right. And when you've had that big of a run, it's not surprising necessarily, I think, for the market, or in this case, a section of the market, to take a little bit of a breather. We're still up from the low, let's see, about 65%. So we'll give the SOX a break here in terms of a little breather after that run up. It will look for it to either break below our support level or above our resistance as kind of a new, that doesn't guarantee a new trend, but that is where the new trend would start likely.
Yeah, I like the sound of that, Brent. Meaning, quite simply, you can choose to sit on your hands, say that there's no new direction until we trade above the white line above us or through the white line below us. That'll be informative one way or the other, and traders can start to adjust their risk parameters thereafter. Okay, Brent. So let's look at some of these other groups that we normally would after running through the majors. Let's look at some of these sectors. And of course, the big leader today is communications. We're going to look at the underlying equities in here briefly, but this is likely tied exclusively to the Google announcement of the antitrust story kind of falling apart as the story is that the full divestiture of Chrome via antitrust details has basically been shut down. So apparently this is not going to happen. They will not be forced out of Chrome, nor will they be forced to eliminate the relationship with Apple, allowing them to place it as a native application on the Apple phones.
Yes, and for those of you who are wondering, like, why does Apple allow that? They get like $20 billion or something in that order a year from Google for that, because they do that. So that's why they can react as well on this. But yeah, nice strong reaction, and it shows. Look, hey, this is the communication sector. Obviously, Alphabet is a huge part of that. So Alphabet being up 8% is going to have a huge disproportionate effect on what the communication sector as a whole is doing on that. But yeah, that's driving that, and also, Google's a big part of the market too, so it certainly is influencing overall market performance too.
Yeah, so I wanted to point that out as it relates to communications. Like I said, we're going to see charts of Alphabet and Apple momentarily, but let's continue to work through these bounce areas, right? Obviously, communications getting a nice move, new highs. Technology made that pull back to the same level that the rest of the group did, that the NASDAQ 100 did. The 50-day moving average coming into play here with yesterday's low and already trading through it. Still having that same look, right, Brent? A little bit head and shoulder-ish, but these are very tight head and shoulders. I'm trying not to get terribly concerned about things because, once again, when you see what happened yesterday, we opened below the 50 and closed above the 50. That looks like, for many traders, a successful test of support.
Yeah, similar chart to what we've seen on several charts today. And well, that's because IT is a big part of the market, a big part of the S&P 500, big part of the NASDAQ. And so you see similarities in those. But that bounce yesterday, I was looking at the market intraday yesterday, and just saw, I was looking at the last couple hours of the market, and it just kept climbing up, and you can see that reflected in the daily candle there.
Yeah, that's one of those candles you like to see, right? Nice and green, filled in all the way, which tells us that we basically closed at the high of the day yesterday. So weak in the morning, strong finish, not a terrible view of things. And again, when you look at the low, basically that's the test of the same low we made about 2 weeks ago and then about 2 weeks prior. So, horizontal support coming in here, even though the 20-day moving average trend and the 50-day moving average trends, have been tested and kind of maintained here. So I think it gives us plenty to keep an eye on where we would maybe make a shift to our thought process. But for the short term, more of the same. Now, in terms of weakness today, we're being led down by energy, but Brent, energy has made a really nice move of late. Got outside of the triangle that I drew in. I don't know if that's necessarily valid, but it did make a new short-term high. And so if we're wondering about a level for a pullback, one of the things that some traders have noted is when you break even a triangular level like this, that triangular downtrend line that was broken could act as support now, because it was resistance not that long ago. So that's what some traders might be keeping an eye on. But what about you, Brent? What are you watching as it relates to energy here?
Yeah, that's a strong move. But what you can see is that, again, from April lows is kind of where early April is where the market really turned around there. And, we've had decent performance over the last month on that. But I guess I just have to say I agree with you on either the line you drew, but just in general, looking at the levels, when energy lately has been around the level we're at, 677, 678, 676 level, it that's the level we've traded at, and so far we've held on this. So we'll have to see where this goes from here. But if we can hold that line that you drew, I think that's a key level on that here on this. And energy in terms of overall sectors have been about mid-range over the past. If you look at the 11 sectors, it's the sixth best performing one over the last month, I guess.
Yeah.
But it's the overall market has been doing fairly well. 9 of the 11 sectors have been positive over the last month. Here.
Yep. Yeah, and of course, there's been a bit of a move in oil as well. Let's just take a peek here. Oil has made a real interesting move, as it turns out, Brent. Off of the lows, we kind of traded in this channel, but what stands out to me now is this action basically for the last month. We rallied into resistance and may very well be failing here. That's actually a interesting development from the standpoint of what it could mean for the broader markets, because a breakdown in the price per barrel is disinflationary.
It is disinflationary, and not just for you and me at the gas pump, but for every company that uses transportation, basically.
Mm-hmm.
And so, because those costs ultimately get passed on to everybody, and that can help the inflation narrative. And the inflation narrative has been concerning, but certainly not like horrible compared to what some people have expected at this point. So there's still a lot to be determined on prices going forward. I don't know what we're going to see, but this is just one thing that's going to help with that.
Yeah, that's we'll see if this break actually continues. Obviously, I'd say there's more work for the oil bulls to get this back up above about 67 a barrel than there is for the bears. And it looks like right now we're in the midst of a rejection right at the 50-day moving average. So we'll have to monitor that on oil. Okay, so we're in that final 15 minutes or so. Brent, is there any of these other sectors you wanted to make sure we hit on before we move on to some stocks in the news today?
One thing, I'd like to hit gold at some point.
Silver. Let's do it.
I don't know if we want to do that now or
let's
later.
go ahead and do that, because both have been moving quite impressively, not just in the spot price, but also the miners for these. There's gold breaking out to new all-time highs, Brent.
Yeah, those are all-time highs.
Yeah, this is the price per ounce, and on the daily, it looks like a pretty well-defined ascending triangle breakout.
Yeah, and sometimes we do those, we draw this ascending triangle, and it doesn't really, come to fruition. But we've had a nice strong break at this point, and so gold. Earlier we were talking about this risk on, risk off mentality that people have in the market, and we said, well, maybe a little bit more risk off mentality is taken over right now. Well, that could be, partially responsible for gold on this. So,
wow,
potential of maybe lower interest rates could be helping gold, because if bond rates are lower, then that makes gold more attractive. Also, just uncertainty, overall uncertainty can certainly drive gold up, is another aspect of that. And so, any way you slice it, that's an all-time high, and gold has had quite a strong run here. And I don't know where it's going to end. If you look back historically on gold, it goes like, if you do a long-term chart on gold, if you can do like a 20-year or something like that, what happens is it has long periods of doing basically nothing, but then it rockets up for quite a while. We seem to be in one of these rockets up periods of time with gold, and I'm sure that'll come to an end at some point. But right now, that's a wave that a lot of people are riding successfully, and there's no end in sight, I guess, at this point.
Yeah, what stands out to me, Brent, on the weekly here as it relates to the price is just the trend working against the 20-week moving average.
Yeah.
You had a period in here back in 2009 when the market was obviously quite squirrely and we were still trying to figure things out. You got gold rallying really strong. Notice how the 20-week moving average provided support. Well, that's exactly what's in play right now. And a lot of trend traders might just stick with that. And of course, I'm not telling you that that's the only option, but if you notice the trend, pullbacks to the 20-week have been opportunities to join the trend, not opportunities to bow out of the trend. So, if you're trading the trend, one way to keep an eye on that trend is this 20-week as it relates to gold. So let's see how silver looks here. I imagine we're going to see something similar. So silver, hi ho indeed, Brent. That thing has taken off.
Yeah.
Exploding from this 820 low of around 37 an ounce. And my goodness, now we are all of a sudden up about 13% to about 42 an ounce all of a sudden.
Yeah, so silver had lagged gold for a while, but it's actually done quite well lately. And silver is it's a precious metal, but it's also an industrial metal as well. And we've just seen a lot of strength, and that kind of channel breakout looks like we've gone about that distance at this point here. And so that would be one potential target. But right now, we're well above a 20-day moving average, which just shows how strong we've been right now. Look at that RSI at the top of the page, at the bottom of the page. It just kind of shows how strong we've been. It doesn't mean it's going to be bearish, but it also wouldn't surprise me if we had a little bit of a breather here either.
Yeah, and of course, the price in these metals has been moving quite strongly, but it's also something that I've been speaking about a little bit periodically are the miners. So if you look at like the total mining index, I think it is DWC MIN for the total stock, U.S. mining across all. This has been moving, but if you wanted to look at this from a gold mining specifically, DWC PCS, and you can see the same thing here, everyone. So lots of moves in miners in the space, moves in the actual price per these metals. So something to monitor and watch here as well. In terms of trade management, you traders, some of you like to take trades off or take portions of your trades off as we move in strongly. Some would say as you're trading at levels you've never achieved and you're starting to get a little bit parabolic. I mean, you look at this, Brent, this has just exploded to the upside very, very quickly. Some like to sell into strength. Others want to sell only when the trend breaks. Just define who you are as a trader so you know what your preferences are, and that'll help you make your decisions along the way, hopefully. So a good look there, Brent, at the metals, which we wanted to make sure we hit on. So I'm glad we did that. Let's get to those stocks in the news, Brent. Let's look at a chart of Alphabet, which is going to look pretty similar to what we saw in the communications, but this is breaking. I mean, what are you gonna say? All-time high? Is this now all-time highs? It sure looks like it, Brent.
Yeah.
Yep.
Yeah.
Wow.
All-time highs on a stock that's just gone. It's been just a stellar performer for many years here. And what do you say? I mean, like one of the big concerns with these big tech companies, Google or Alphabet and Meta and Apple and probably Nvidia even, or it's like antitrust concerns. Well, so that was a big thing that was kind of weighing down Alphabet for a little bit. Well, this helps. I mean, it doesn't mean all antitrust concerns over the next few years are gone with the company, but this was a big hurdle that they had to clear.
Yeah, no doubt. Had to get this one lifted, and you can see that the market, there may have been some anticipation of this, or I don't know about you, Brent, but we hear a lot about antitrust from time to time, and these things tend to play out in the way that this one did, which is no action. lots of discussion, lots of litigation back and forth, and frequently no action. So, you can't take that at face value. That's going to be that way every time, but it sure seems like, these things rarely come to fruition would be in my experience, Brent.
Yeah, I mean, I think that's probably true. And if it were true and they broke off, say, the Chrome browser from Alphabet itself,
yep,
then we would have seen a pretty negative reaction, I think. But there was enough uncertainty that the market is telling you. Because if there weren't uncertainty, the market would have priced it in already. And so there was enough uncertainty that that Google has given us a pretty strong reaction there.
So on the heels of this news, we had price target adjustments. Now, I'm going to preface this, of course, with my standard disclaimer, which is that price targets by analysts are never guarantees to be achieved. So Barclays raised the target to 250 from 235. KeyBank, new target at 265 from 230. JP Morgan, new target 260 from 232. And Citizens raised to 250 from 225. All of them keeping an overweight, or outperform ranking on Alphabet. Now, the other big mover here on this news, of course, is Apple. And Apple got a nice little lift today, up about 3%. They were reiterated as an outperform at Wedbush, target at $270 a share on this news, calling it a massive win from the court's ruling that the ongoing $20 billion search deal between Alphabet and Apple can hold and can remain, will not be barred in its current form. And you can see, really, Brent, the action on Apple, has been really impressive over the last 2 months as we broke out from the downtrend and have worked to recapture the 200-day moving average over the last month.
Yeah, and it looks like you have a trade on there, and you're near your target on that, Kevin.
Yeah.
So things are cooperating. The court heard you, and it's helping you out there on that one. But yeah, nice bounce off that 20-day moving average, and nice kind of flag pattern there. Yeah.
Yeah, you're absolutely right. And I do have an open trade working there. Looks like if we jump over to my monitored page, we can find the actual trade. There it is. Just a position in the shares, and it was a one of those deals where we picked up shares to in a structured entrance with exit strategies. Right, a stop order beneath us, a limit order above us. We got into that one in the first week of August there on the 8th, and I always like to see when we bought in. So here was the 6th. And that was breakout on the 8th. So we bought in on the big candle day. And because we placed our stop properly, we did not get close to getting stopped out. So that one has an opportunity maybe to get taken out at the profit target at some point this week, if not just today. So maybe that's an adjustment that gets raised. But, I think I placed that one in my after the close class, which I will be hosting tomorrow. So we're going to let that one go until tomorrow, everyone. So there's a little a tease, if you will. Keep that one on your calendar, everybody. You can meet up with me tomorrow afternoon at 4 p.m. Eastern, and we'll talk about that one for fun. So, okay, Brent, let's see. Got about 2 minutes to go. We do have some other stocks in the news. I thought we could hit up a couple of these upgrades. So yesterday we heard about Kraft Heinz. They are going to be kind of splitting things off a little bit, right?
Yeah.
So the market didn't really love that, and neither did Warren Buffett, as it turns out. He was a little disappointed in that news, but Morgan Stanley upgraded Kraft Heinz to equal weight from underweight and put a target at 29, which is up from 28. I think the 29 is interesting because it calls out the 200-day moving average.
Yeah. So there you go. Market, sometimes you don't know what the market's going to do. Like, you see the earnings report or something, and you don't know, how's it going to react? And sometimes it's a surprise. Going in, sometimes when a company splits off apart, it reacts positively. In this time, clearly people did not like that plan. We do have probably a support around that 25.5 level-ish or something like that. We didn't get quite down there. So far, so good today. Maybe yesterday was a little bit of an overreaction on that.
Maybe.
And so we'll just kind of see how what if you're a bull, what you want to see is you definitely want to see yesterday's lows hold, and you'd like to see an up, a higher day today on that.
Yeah, ideally, that's what you want to see. Ultimately, I think it's safe to say, Brent, we're still in a downtrend.
Yes.
For a lot of you traders
Yep.
out there not interested in buying stocks under their 200-day moving
Yep.
average, this stands out at this point. Could it be a shift or a change? Sure. But commonly, traders will tell you they'd rather wait for that trend shift to actually start taking hold before they start taking position. So maybe a little patience in the offing here as it relates to Kraft. So,
Good
Brent,
point.
with that, we're going to have to wrap it up. We are at time. So let me just say some thank yous first and foremost to our friend Barb Armstrong there in the chat. Really appreciate you managing things there for us, Barb. Thank you so much. Thanks to all of you for being here, of course. Make sure you're following the three of us on X. And if you like today's conversation, hit that thumbs up button down below to let us know what you thought. But Brent, always love having you on a Wednesday, man. Thank you so much for sharing your insights, sharing your thoughts with our viewers here today.
Always enjoy it, Kevin. Thanks. Have a great day.
Yeah, you do the same. And thanks to all of you. Hope you all have a fantastic Wednesday. Much more to come from us here on the channel. We look forward to seeing you all again real soon.